Now let's be honest, as of recently, for us dividend growth investors that have been stacking so many shares of the Schwab US Dividend Equity ETF or SCHD for a long time now. With all the crazy volatility that we've seen in the market as of recent, and SCHD ETF holding up so well, it feels even better than ever to be a shareholder of so many shares of the ETF that we all love. Now that brings me into today's video, which we're going to talk about all the most recent volatility in the market, but actually year to date, at least as of filming this video, has actually outperformed the market by a decent margin. Now we're also going to talk about the fact that this ETF does have an ex-dividend date coming up very soon, so you're going to want to stack as many shares as possible if you want to get the next dividend payouts. Now, all I have to say that I promise you, if you hold onto this ETF, you're going to want to know exactly why this ETF has the potential to grow a lot more from here. So make sure to stick around, drop a like down below, and let's get right into it. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. Now I think generally speaking, dividend ETFs and dividend stocks for the most part have been holding up quite well so far this year, at least compared to some of the AI stocks and some of the higher beta names across the markets. Now that's one of the good things about being a dividend investor. Not only do we not necessarily care what the price of different shares throughout our portfolio necessarily are sitting at, because we're mostly looking for dividend income to be paid out consistently. But along with that, during times of rotations where a lot of investors are searching for safe havens or lower beta, lower volatile stocks and ETFs, dividend names like SCHD or even as of recent Realty Income or Verizon stock are definitely getting some much needed love. Now year to date so far, SCHD is up over 4%, and I get it, that's not anything insane, but again, compared to the rest of the market, not bad whatsoever. Now I also wanted to mention that the next SCHD dividend is coming up very soon. The next dividend date is going to be on March 20th, which is just right around the corner. So again, you need to own shares of this ETF by that point if you want to get paid the next dividend. But the main reason I wanted to make today's video is because I wanted to talk about the fact that as of right now, especially with all the market volatility and the fact that we're seeing somewhat of a rotation in the markets, it seems like SCHD is shining more than ever as of right now, along with a lot of other dividend names. Now, Millennial Dividends from seekingalpha.com wrote this article. I read through a little bit of it and I had to share with you guys. It says this is the time for SCHD to shine. It says summary, market volatility and uncertainty makes defensive ETFs like the Schwab US Dividend Equity ETF attractive for stability and reliance. SCHD's low expense ratio and large cap value stock composition makes it cost effective and less volatile compared to tech heavy ETFs like SPY or the Qs. SCHD outperforms during market downturns, offering a 3.6% dividend yield and better downside protection, making it an ideal tactical allocation during uncertain times, which is again why I think a lot of investors are turning to it. Lastly, they said despite underperforming bull markets, SCHD's defensive nature and mature companies holdings provide a balanced long-term investment strategy amidst economic fluctuations. Now, I've been dividend investing for around 10 or so years, and during bull markets, it's not always the most fun holding on to sort of slow and steady tried and true names like SCHD, for example. But during times like as of right now where the market's going a little bit crazy and volatility is spiking, having SCHD in the portfolio and a large amount of it is definitely helping me sleep at night. Now, reading on this article, it says this week the market resumed its downward trajectory after Trump's promised tariffs on the two closest trading parents, Mexico and Canada, came into force, just to be paused a few hours later until April 2nd on certain imports as the newly appointed US cabinet faced global backlash alongside a pushback from automaker CEOs. They then said we are living in interesting times because it appears that no matter whether we speak about US politics or the domestic economy, we see a 180-degree change in the narrative every single day, and if the market hates one thing, it's uncertainty. That's the reason why we saw the market weighted indices, the SPY pulling back as much as 6% from the all-time high, and the Qs down around 9%, bringing it into correction territory. They then said, of course, this article is not about market weighted indices, but I want to build a case to show you how the Schwab US Dividend Equity ETF or SCHD, despite being critiqued for perhaps a lack of performance during the recent bull markets, is the go-to ETF during market volatility, as it generally better withstands market shocks and tends to outperform thanks to its defensive stock selection, particularly during recessions. Yes, in the grand scheme of things, particularly during tech bull markets, SCHD will underperform. other, perhaps more growth-oriented or market cap-based ETFs. But we shouldn't be short-sighted, and SCHD's performance should be evaluated over the whole economic cycle, including weakness and recessions, which during those times it normally holds up quite well. They then said the case to own SCHD. When buying ETFs, one of the key things is expense ratio at 0.06%, where the investor pays $6 annually for every $10,000 invested in management fees. SCHD is one of the most cost-competitive ETFs out there. The reason for that is simple. If you invest $10K today, for the next 30 years at an average annual appreciation of 10% with a 0.06% expense ratio, one pays $975 in management fees, whereas a 0.3% expense ratio, for example, you'd pay over $4,500. Now also at any given time, SCHD represents 100 holdings, and the ETF is mostly composed of large cap value stocks contrary to the market weighted ETFs that are heavily tilted towards mega cap growth. Now the lesser growth oriented exposure to the mega cap stocks is the reason why SCHD tends to underperform during bull markets, which during the last few years was fueled by tech stocks, who showcase industry leading profitability and top line growth. Now they then said my investment style is simple: to earn a total return in excess of the markets through a risk-conscious asset allocation. That's why I'm looking at SCHD through the lens of a defensive ETF rather than a dividend-oriented ETF. Yes, mature companies pay dividends more often than not, and SCHD is used in many dividend-oriented portfolios due to the specific dividend selection criteria, but the ETF is versatile enough to find its place in any portfolio or for tactical allocation, or to be used as a defensive position. It then said certainly my 2025 base case scenario for the US is not a recession, but if the newly elected US president stays stubborn about the tariffs with the potential to reignite inflation, pushing interest rates up, mature companies with healthy dividends and healthy balance sheets that better absorb market shocks are the assets that I prefer to be invested in. Now lastly, the takeaway says all in all, SCHD is a dividend-paying ETF, but I view it as more of a defensive ETF with mature companies, healthy balance sheets, and exposure to legacy industries, enabling us investors to diversify away from the mega cap dominated broader market ETFs. Personally, I don't stay invested in SCHD for prolonged periods, as my investment time horizon is very long. I instead dollar cost average into broader market ETFs or individual quality stocks. But SCHD could be used as a tactical allocation and could be used as an offensive position in a portfolio, especially during times of volatility like we've been seeing as of recent. So not only has SCHD been paying dividends, paying more in dividends over time, not to mention the max time frame is up around 235% as far as price return. But the ETF on top of that does have defensive qualities, and a lot of investors are turning to this ETF during the craziness that we're experiencing as of right now in the market. Now my strategy with this ETF is going to remain the exact same. Buy a few shares every single trading day and keep stacking up more and more shares in my portfolio, honestly regardless of price. But one thing's for certain, especially with the ex-dividend date coming up right around the corner, I would not be surprised if we see SCHD really start moving up in price closer and closer to the $30 range. So now that we talked about the fact that SCHD does have defensive qualities and the fact that a lot of investors are turning to this ETF during the current market conditions, along with the fact that I personally do think this ETF has some more room to grow, even in the current market conditions in 2025. I lastly, most importantly, want to hear from you guys down below. When it comes to the current market conditions and SCHD, are you currently buying shares, selling shares, or holding? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.